Rich, can you tell us what are the key problems facing pension systems today?
Well, these plans are really in trouble. These are the cash benefits that are paid to retirees who used to work for state and local governments. And the crux of the problem is that the costs of these plans is soaring. The costs are soaring. Now state and local governments are spending about $100 billion a year on retiree payments for their former workers. That's more than twice as much as they spent in inflation-adjusted terms just a decade ago. And then the real problem is really much worse, and that's because plans are not putting aside enough money to fully fund their future obligations. So state and local governments have made promises to their retirees, but they're not setting aside enough money to pay for those promises. Now only about 75% or so of those promises are fully funded. That's according to the state's own calculations, but most economists think it's much worse. And that's because the procedures that the state actuaries use to compute these future obligations really understate the costs. If instead they use the same procedures and use the same interest rate that private employers use, then the situation would be, instead of a $900 billion or so shortfall today, it might be as much as $3 trillion. So that's really the essence of the problem.
So now a lot of Americans don't have these traditional defined benefit type pension plans that a lot of public employees do. Could you just back up for a second and just briefly explain how these traditional pension plans work and maybe how they're a little different from the kinds of retirement plans that a lot of folks have?
Yeah, so what really makes these retirement plans in the public sector unique is that they are traditional defined benefit pensions. That means that the retirees are promised a guaranteed payment from the moment they retire until they die, based on years of service and a final average salary. Almost all public sector workers have that. 86% of full-time employees in state and local government have this type of benefit. In the private sector, by contrast, only about a fifth, 20% of full-time employees have this type of benefit. Many of those plans are actually frozen, meaning that they're not accruing new benefits, meaning that new employees can't join. So the differences between the sectors are really stark.
So now, why are these defined benefit traditional plans in so much trouble? Is it just because of sort of their nature, or is it because they're too generous?
Well, it's definitely the case that in the public sector, the governments are paying much more for retirement benefits than the private sector employers are paying. So on an hourly basis, the costs are probably 4 times as high on average for state and local governments for those retirement benefits than in the private sector. And that might suggest that that's really the crux of the problem. The problem is simply that these benefits are just too generous. It's really a little more complicated than that. If you look at why one of the issues that we need to consider is that we want to look at total compensation between the two sectors. So retirement benefits might be very generous in the public sector, and that's just to offset their low current salaries. We also need to adjust for the fact that workers in the public sector are much better educated on average than workers in the private sector. So fully half of state and local government workers have a college education versus only about 25% in the private sector. Once you account for those two things, what you find is that salaries are on average maybe a little bit lower in the public sector than the private sector, more so for state workers than for local workers. But once you add in the cost of retirement benefits, then compensation is quite a bit higher in the public sector on average than in the private sector.
So how do we fix these serious problems facing public pensions? Do we need to simply just kind of play around with the policies and make them better, or do we need to move away from traditional pensions entirely?
Well, so that is really the crux of the issue. A lot of people have said, we really need to abandon these plans. They're no longer in place in the private sector. There's a reason for that, and private employers have made the cost-benefit analysis that they're not worthwhile. Let's do the same thing in the public sector. When you look at why they're fading away in the private sector, one of the reasons is that it's just high regulation. the cost of the regulatory burden on private employers is so high. They also have to pay high insurance premiums to a federal agency that that ensures the benefits in case the firms go out of business. Those costs don't exist in the public sector. It might also be so that would suggest, well, maybe they can exist in the public sector and not the private sector. There's another issue, which is that it might be the case that public sector workers really like these very secure pension benefits. And in fact, we do know that surveys suggest, anyway, that public sector workers are more risk averse than private sector workers. So maybe they're going to the public sector because they really want this type of security. On the other hand, when you look at what happens in those few cases where public sector employees are given a choice as to whether or not to choose a traditional benefit or the 401k type plan that prevails in the private sector, what you find is that a fair number of people in the public sector choose the 401k type plan. So it's unclear as to really how much the public sector worker really values these very generous retirement benefits that they're getting.
It sounds like a lot of directions policy could go here. Well, thank you for your time today, Rich.
Thank you.